So today we are talking about a topic that comes up often with Canadian homeowners, and that is the theme of reverse mortgages. If you've ever heard that term before, well, today you're going to get an explanation as to what that is. And so I'm joined here by Gus Sarris. He is the Business Development Manager for HomeEquity Bank, which is Canada's leading reverse mortgage lender. So thank you very much for being here.
Thank you for having me, Adrian.
So, Gus, speaking of reverse mortgages, for someone who is hearing this term for the first time, reverse mortgages, in simple terms, what would you say it is and who is it designed for?
Yeah, good question. So reverse mortgage, very simply, is a mortgage where clients are not obligated to make a payment. So as you know, your traditional lender, clients are obligated to make that monthly payment. Okay. With us, is very simple, is clients are not obligated to make that monthly payment. Interest gets added onto the principal balance, and that's how it helps clients with their cash flow situation. That's what the design of a reverse mortgage is designed for. Actually, is to help the cash flow of Canadians. Okay. Now you're going to say to me, okay, who applies? Who does this cater to? This caters to clients above the age of 55. So all applicants must be above the age of 55. Why was this product created? Well, it was created to help aging Canadians, provide a better quality of life. So, for example, people are burdened with monthly payments on their mortgage, car payments. They may have some debt, and they're finding themselves barely scraping by, and they're feeling the pinch, especially now with how cost of living has gone expensive. Mm-hmm. And what the reverse mortgage does, it helps the clients with their cash flow. So, essentially, clients don't have to make a monthly payment if they choose not to. Now, what we look at a reverse mortgage is two factors we look at. We look at the needs and we look at the wants. Okay. So the needs are, for example, client has a current mortgage and they can't afford making those payments anymore. They may want to consolidate some of their unsecured and some of their debts. For example, they may have credit card debts, on a line of credit debt. They may have a car payment that they can't afford making in monthly payments. Another one is also home care, having a nurse, 24-hour care coming in is costing them $5,000 to $10,000 a month. I've seen applications where they're coming at $12,000 a month, and they need that help to have that nurse continue coming to their home to help their spouse or to help their parents with having a nurse. Then we have something called the wants. So, for example, clients are looking to purchase a summer home, a cottage. They're looking to buy a summer vacation home outside of Canada. We've seen a lot of people buying in other parts of the world
with better weather.
Better weather, exactly. We're also seeing them trying to find ways to help their children, certain early inheritance.
Okay. And can you elaborate on that?
Yeah, early inheritance is very simple. What we're noticing is Canadians are looking at, you know what, rather than waiting after we pass away to inherit the money and take care at that time, they're saying, you know what, why not give it earlier to help them purchase a property? Maybe potentially help them with their education. I've seen applications where they're going into law school, the kids going to law school, or they're going into medical school. It's costing hundreds of thousands of dollars. Giving them early inheritance to help them to get ahead in life. We've seen applications where clients are looking to buy investment properties or using a reverse mortgage. So those are some of the things that we've seen. So it's the needs and the wants. And we have something else that we've seen a lot of big uptake in applications is kind of like a monthly income. Oh. So people have just recently retired. They're used to a certain lifestyle. They only got their CPP, OAS, maybe a small pension income. But what's happening is they cannot sustain their lifestyle. Okay. So rather than, taking a lump sum mortgage out of their property and equity out of their property, they're saying, you know what, why don't we do it in installments? So the minimum is $1,000 per month. Clients can take it out of their equity of their home, and it's been every month coming to their account, kind of like a pension income. Wow. Additional income.
And you only pay interest?
On whatever the client's taking.
Got it.
So you're not paying that full lump sum. That's a great product, and we're seeing an uptake on that product. So there's a lot of options in the reverse mortgage that helps Canadians.
Good. That's a very good explanation, Gus. So now, what is the biggest misconception that you hear when it comes about reverse mortgages? Something that can worry some of the Canadians out there.
It's something that comes up daily, especially when clients are not familiar with reverse mortgages, or even mortgage specialists are like, hey, Gus, what's some of the misconceptions you're hearing? My clients are worried about two things usually I tend to hear. One is you can't make any payments with reverse mortgage, so it takes away your equity at a fast period of time. And the second one is inheritance. So I'll address the first point about clients who worried that they can't make any monthly payments or can't make any payments with reverse mortgage. So with reverse mortgage, you could make payments.
Oh, you
can make up to a minimum of $100 per month if you're worried about your equity.
Okay.
You can contribute up. You can do a partial. So meaning you could do $100 minimum. You can do $200, $300, $400, $500, whatever you can afford.
Okay.
You can do a full monthly interest payment. So versus you may say, you know what, I can still afford paying that minimum interest payment. I'm going to do it monthly. They can do that. And they can do 10% on the anniversary date. So there is options for in a reverse mortgage where clients can make a payment.
Okay.
That's something I will time. Oh, you know what? Reverse mortgages, clients, to take away my home. I can't make any payments. Yes. But that's false. There is options that they can make payments.
Good.
And the second one is inheritance. So one thing I always encourage brokers or mortgage specialists is to always include the children in the talks with parents. And the reasons why I always encourage that is because the kids have to know what their parents are getting involved in. Of course. Because kids are always worried about when the parents do pass away, will there be some inheritance for us? Of course. Now, we do have tools that we do provide that mortgage specialists have access to, which can show that in a 5-year duration, if you make 0 monthly payments, how much interest will be accrued over that period of time. And we also have in that same calculator appreciation value. So, for example, in good times, we saw about 5-10% annual increases in values of properties. Now we're probably seeing about, depending on location, 2-3% annually. But we have a calculator that shows that if the appreciation value, let's say at 3% annually, and let's say over a period of 5 years, that you're still far ahead than you were 5 years ago.
So the key is really the appreciation value of the property.
Correct. Over a 5-year window or a 10-year window, whatever it may be. But there is tools that we do have that we do share that if clients and children are worried about inheritance, we can provide that to show them the calculator, to show them how much appreciation of the property and also the interest that's being accrued over a period of time.
Okay, well, that's a good point. So definitely those are two myths that just really are completely wrong.
Correct.
Okay. Now, a lot of people worry about risk in the same subject. So what protections are built into reverse mortgages so that homeowners should know about?
Fantastic. That's a great question. So with reverse mortgage, you have a 99% no negative equity guarantee. So meaning there's conditions that do apply. So meaning that even if you are in a negative equity situation, we will never kick them out of their home. Okay. However, there's conditions that do apply. In a reverse mortgage, there's things that we do require. Property taxes have to be paid up to date.
Okay.
If there's any condo or element fees that need to be paid, they need to be paid monthly.
Okay.
They must maintain a home insurance policy annually, and also they must be residing on that property. If they meet those conditions, there's no negative equity guarantee. Okay. So there's protection for the homeowner. Very good.
Yeah, I think that's a key point, right? To have people have peace of mind.
Absolutely. Yeah. Absolutely.
If someone is listening right now and they're wondering whether this could be an option for them or not, who should have the conversation and who probably shouldn't?
Good question. Now, I always say it's never too early, never too late to have these conversations. And what I mean by that is very simple. Clients should start, and I always have these conversations with mortgage specialists and say, you know what, why don't you start having the conversation? The clients are late 40s, early 50s. They might look at retirement early and say, you know what options do I have? I want to retire at the age of 55. What options do I have? Reverse mortgage might be one of those. A second thing is you're never too late. So what I mean by that is that you might be in your 80s and 70s or 60s or even 90s sometimes we see application. I had an application, clients are in their hundreds. You know what I mean? You're never too late. And one thing I want to preface on this, because this is something that I always see in applications that do come in, and when I do have the conversation with the clients, they feel that they're alone, that there's no options for them financially. And what I mean by that is very simple as this. They feel that they failed because they still have a mortgage, maybe potentially in their 70s or in their 60s or in their 80s. You know, they should be mortgage free. Yeah. They should be living life and they should be enjoying it. But now with that financial burden and their 70s and they're making that monthly mortgage payment, they're finding it hard and they're embarrassed to talk to somebody about it and say, you know what, I'm struggling, right? Or I'm having a hard time, or I want to help my child, but I don't know how to help them. A reverse mortgage might be an option for them, right? Now, I do have a question I said, well, who shouldn't have these conversations, you know? And again, there is situations where clients are financially doing well, they're mortgage free and clear, they don't need the money. I would say those clients are not the ones who need it. Now, there might be an investment opportunity for those clients as well, too, where they work with a financial planner and say, you know what? let's take 100,000 and invest it.
Mm-hmm.
We'll make a 12% return, right? Or a 15% return, whatever that may be, but there might be an option there. That's something that financial planners can help with the clients with.
Yeah.
But what I'm trying to say
and that's
here
on a good year.
And a good year, of course. But one thing I want to say about a reverse mortgage is very simple. It's about improving the quality of life of Canadians.
Okay.
And one thing that I want to leave you with is this: you're not alone. Don't be embarrassed.
Mm-hmm.
There's support like you, Adrian, that can help them find solutions. And not only that, but there's ways of us as a lender helping these Canadians, right?
Mm-hmm.
Stay in their home. There's some statistics I want to share with you actually before this is really important. 93% of Canadians want to age in their property. 93% of Canadians want to age in property.
Okay.
That's one statistic. Another statistic is Canadians who are in retirement right now, 20% of them still hold a mortgage. And 66% of those individuals actually do carry credit card debt.
Oh, wow.
So,
which is a ridiculous rate.
Absolutely. Especially, you've worked hard all your life. You've paid your bills. You're mortgage free and clear. Now all of a sudden you have credit card debts. You have maybe a small mortgage payment still, or car payment. It's all about alleviating that situation, helping Canadians stay in their home, not being forced to sell the property,
mm-hmm.
and just staying and living their life being peaceful and happy.
Good. Yeah, very good. Just one question I wanted to ask you.
Yeah.
In regards to qualifying. So a lot of the times some people think that, I have no income or very little income.
Yeah.
Now, unlike a mortgage where you need to have a specific amount of income, well, how does it work with reverse mortgages?
Good question. So now, we do require a little bit of income.
A little bit.
So CPP, OAS, we do require income just to kind of maintain their property taxes. So with the reverse mortgage, we're worried about the property taxes and home insurance policy. So we will ask for a little bit of income. We also look at location of the property. So great for bringing that up. So we look at a couple things. We look at locations,
okay,
age of the clients.
Yeah.
We look at the value of the property, mm-hmm. and based on those three, and income, and based on those situations, we can lend up to a certain point.
So that means, for example, if you have, if I get this right, that means that how marketable the property is. So
Correct.
The closer it is to maybe a city,
Correct.
as an example, the
Correct.
more equity you could take out.
Absolutely. So that's one. And the second thing is, we can go up to 55% of the value of the property, loan to value, depending on the client's age. So the higher the age of the client, the higher the loan to value.
Okay.
The lower the age of the client, what I mean by lower, clients 55 to 60, they may qualify for less.
Okay.
But there's an opportunity there still. They have mortgage still, whatever it may be. But with reverse mortgage, it's very simple. We have a calculator that you have access to, mm-hmm. that can tell the client, you can tell you what the client qualifies for, okay. based on location, age, value, and then that'll kind of tell you what the client qualifies for. Whereas traditional lending, as you know, you need income to qualify the client. With us, we don't really need that to qualify. We're more of an equity, but we do require income just to kind of they can maintain their property taxes.
Got it. Okay. That's good to know. It's good to know, especially because that's one concern that some people have. Very good, Gus. This was a great explanation, to the point, very simple terms. Is there anything else you want to mention before we finish?
You know what? Thank you for bringing that up right now, because there's one thing that caught my attention. So we had a presentation about a month ago, and we had one of the leaders in the industry, Dustin Woodhouse, and he threw a comment, and this is what stuck with me. If you cannot be mortgage free, why not be payment free? Mm. And what I'm seeing now in today's environment, especially cost of living going up and getting expensive, people are having a hard time. Mm. And some of the applications that I'm noticing is are coming in, clients still in their 80s, 70s, still have a mortgage payment, still trying to find ways to help their children, still trying to help their kids get ahead, whatever it may be. But one thing I want to stick with is that, and then what Dustin said was really interesting, you cannot be mortgage free, payment free.
Payment free, yeah.
It's all about cash flow.
It's a great relief.
Absolutely,
for someone.
especially for Canadians, especially in this economic conditions.
Yeah.
So what I want to leave with is that you have great support, Adrian. If you ever need a mortgage specialist, Adrian's a great guy. And again, he'll be here to support you. He'll always reach out to me if you have any questions as well, and he's here to support you. So you're in good hands, and thank you for having me.
Thank you.
On this call.
And the same with you. Obviously, you're always there, very attentive, good communication with me. So, so people out there, clients out there who are who can qualify for this product, this would be something that I would also recommend. If once we have a full financial picture, obviously.
Absolutely.
But thank you very much, Gus,
Thank you
for this interview.
Thank you. I appreciate it. Thank you for having me.